All right. What is up, tycoons? What's up, traders? Super excited for today's video. Very important video for you guys today. And we're going to break down a lot in today's video. It's mostly going to be price action based. We're going to take a look at a few charts, break everything down for you guys, and really go over why I have been bullish on natural gas. So please make sure to smash that like button and subscribe to the channel if you guys are new. All right, we're going to break down this. We're also going to take a look at the futures 4-hour chart. Now, there is a little bit of a warning saying we could see some type of a pullback sometime here soon. Natural gas has rallied really strong. All right, we're going to take a look at the monthly supply and demand zones, and you can take a look at this huge monthly candle right here. Very, very green. We love to see that. It's a good sign. And we'll take a look at some of the buying opportunities that there has been in things like BOIL, okay, and some of the possible structure we could see here in BOIL, as well as UNG, all right, and how you guys can make some profits just like this, okay, in a very short period of time, trading options or, via shares, okay. I just closed this position the other day on Monday. This was a one-day swing trade, 42% returns via options, all right, and then these are the remaining shares that I have in UNG. Okay. So obviously I'm not a perfect trader, right? I'm up 22%. If we take a look, UNG has actually rallied, over 30% from the lows to the highs. But we're going to go over some of the different strategies that you guys can use in this, the chart data that I use to keep myself profitable throughout this whole natural gas fiasco. Okay. If we take a look here, this was the setup for my long position in cold, and we'll break that down as well. This is the chart from one of my most recent coaching sessions, and I explained really what I was doing here, why I went long on cold, and you guys saw that was a very nice quick swing trade that I was able to get some very nice returns on. Now, you can always email me for a one-on-one Zoom coaching session at zachleytrades@gmail.com, and we can work up on setting a time and a place, really, wherever it is, wherever you want, because it's via Zoom, but we'll work on setting up a time. If you guys are ever interested, just shoot me an email, zachleytrades@gmail.com. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice, so please be sure to read through the full disclosure. Now, with that being said, okay, the main reason that I even started creating natural gas videos was because of this chart right here. Now, what we're looking at is the Henry Hub natural gas spot price, okay? And there's a very significant level here, which is 2, okay? So that $2 price range is going to be this horizontal line here. And what I want to show you guys is that historically, sub $2 has been a good buy. Now, past performance is not indicative of future performance, all right? It doesn't guarantee future returns. But I kept explaining this to a lot of the people in the Discord, hey, look, over here, we spent 91 days below. Okay, that's the length of time. And then we saw a huge push up over here, same thing, 315 days, 150 days, 35 days, 70 days, 245 days, 287. And currently we spent about 105 days, but at or below consolidating around that $2 price level. Okay. And so the whole thesis that I had in my plan, one thing that I've noticed in a lot of my coaching sessions is that people did not really have a plan. They didn't have any type of hedge, downside protection in case things went bad. And oftentimes they were buying up here in this 6, 5, even $7 price range on the spot price for natural gas. When if you look historically, right, prices always drop back down after getting to those levels. Okay. So what I was interested in was okay, well, historically we're at the levels where it always bounces back up, right? And my whole plan was that at minimum, okay, it was going to take a month. Okay. It was at minimum going to sit below there for a month. I knew that the odds of that were very, very small. So I had a much longer term perspective on it. And I use options to hedge my share positions just in case, natural gas continues to go down and consolidate more around that $2 price range. Things like BOIL and UNG suffer from contango and decay, which I have an entire video dedicated on that, really going in depth in all of the different types of decay associated with UNG and BOIL, as well as the myths surrounding those as well. The myths that, you can't necessarily make money and things like that. It's a really great watch. But basically, at best, it was going to take 35 days. And at most, historically, it's been about 315 days. So let's just round that up to a full year. And so I knew that we could spend a month to about a year historically on average below or consolidating around that $2 price range before we saw a rebound. But look at the rebounds that it goes through afterwards, right? So a huge spike up to nearly $7 over here, huge spike up to $6 over here, huge spike up to $5 almost over here, huge spike up to $6. And so right now, the big question is, when are we really going to get our huge spike up in natural gas? And will we even get another huge spike up? Let me know your thoughts down below and what could be the potential catalyst. Now, I've dropped in a lot of more fundamental and news related videos here recently in the past couple of weeks. I drop natural gas videos every single week. But essentially, what I wanted to do was go over some price action, okay, and show you guys, the real reasons why I even got into natural gas in the first place, okay. Now, with that being said, this is the futures monthly supply and demand zones. Now, these are important because this is going to give you the big picture, right? So you can see historically this is a strong demand zone. Every time we've entered into this demand zone, we've seen a strong push up, and you can see here barely, okay. We'll see it a little bit more on the 4-hour chart when we zoom in, but we've tapped the top of this demand zone 4 times. All right, really since 2023 has started, and each time has been met quickly with buyers. So this is still a strong demand zone here that we have, and we are seeing buyers and demand step in each time we push down to those levels. Now we're battling this supply zone up here. If we want to see natural gas and things like UNG or Boyle do good, we really need to consolidate up in this area and absorb this supply, right? Supply zones are nothing but areas of liquidity for sell orders, and it's an imbalance of sell orders that pushes price down lower. And it's been a strong supply zone pushing us down each time that we've come into it, really over the past 6 months. All right. But if we can start to absorb some of these sell orders, okay, and absorb that excess sell side liquidity, we have the chance of consolidating here and potentially creating a demand imbalance where there's more buyers than sellers now, and that would push price higher. There's a lot to be done before we do that, though. And if we zoom in on the 4-hour chart, we do need to be a little bit cautious of this right here. Now, what we have is this blue box, which is a gap down to fill, okay? Now, the reason that this is significant is because I've showed you guys all of the gaps down every time we've created one, and sure enough, we've come back down and filled those gaps within the short future, okay? So, here we had another gap up, filled that gap. Here we had another gap up. All right. Eventually, we came back down and filled that gap. Here, we had another gap up, eventually came back down and filled that gap. So we need to be a little bit cautious because we do have a gap down to fill. It doesn't mean natural gas can't continue rallying in the short term before it fills that gap. But historically, about 90% of these gaps tend to fill. Now, the 4 hours futures chart has been really nice for spotting some chart patterns. Okay. We did have a rising wedge here with a gap down to fill. We got a perfect breakdown, retest, push lower. All right. Same thing over here, rising wedge. We had a breakdown. Then we put in this head and shoulders over here. The head and shoulders played out perfectly. And most recently, all right, if you're staying up to date on the videos, I did put out this inverse head and shoulders that we had right here. And sure enough, that played perfectly as well as soon as we broke out of that neckline. Now, we do need to be cautious of this gap down. We also need to be cautious of a potential rising wedge forming here. It hasn't been validated, so it's just something that's potentially forming. We can break the structure at any given time and create a new pattern. But for right now, this is what I'm watching. And if we, break below this supply zone here, all right, essentially we're going to see this rising wedge play out, and that could result in a drop in something like UNG and Boyle. Okay, so you just want to be a little bit cautious, right? At these times, recognize when things are overbought. If you look at the RSI right here, we are overbought. Doesn't mean it can't go higher. We were overbought here. We had a pullback, and then we went up higher. Now, these are some of the different buying opportunities. Sorry. Now, what I really like to look for, okay, and to make things simple, is a bullish divergence, okay, using the RSI. Now, the RSI is known as a leading indicator, and then you can look at the MACD for confirmation, which is going to be a lagging indicator, right? So you look at the leading indicator to see potentially what's going to happen, what's potentially about to happen, and then you look at your MACD, the lagging indicator for confirmation of what did just happen, okay? Which is why I show these two on my YouTube videos, right? And so talking about bullish divergence, this is what I mean if you're not familiar, okay? So here we have a low, and then here we have a lower low. So price action is clearly in a downtrend. But on our RSI, we have a low, and then we have a higher low. And that resulted in a 40% trading opportunity if you were a perfect trader and perfectly bought the bottom, perfectly bought the top. Right now, no one's ever going to be a perfect trader, so don't ever, expect yourself to be a perfect trader. But these are some of the different buying opportunities that you can use to potentially trade. Now here we come down and we create a lower low yet again, but our RSI continuing to make these higher lows here. Then we also get the MACD crossover to the upside, our lagging indicator. So we end up getting our first signal here, okay, which is going to be that lower low with bullish divergence. And then number two, we get the MACD crossover, all right, our lagging indicator, and that resulted in a 17% trading opportunity roughly. Over here, we're seeing the same thing. Okay, we get the MACD crossover. We come over and the price action is making yet again a lower low. And then we see that we're still making higher lows on the RSI here. That was a 26.8% trading opportunity. And yet once again, we see we have a lower low here, right? We have another higher low right here on the RSI. We get our lagging indicator over here, the MACD crossover, where the red line crosses up above. That's bullish. And that resulted in a 33% trading opportunity. So, this is one of the simple strategies that I like to use when it comes to trading natural gas. Now, this is our BOIL chart, okay? And so we're seeing the same thing, right? Low, lower low, big move up. We have low, higher low, that bullish divergence. BOIL is very closely related to UNG. So, I won't go over each single one that we just had, but rather I want to show you guys the potential opportunity we have forming here. To me, this looks like we have a nice cup forming, okay? So, we're looking at this cup. We're starting to see a little bit of a pullback. And I showed you guys that natural gas futures 4-hour chart. We have that rising wedge, and we also have that gap down to fill. To me, that suggests that, hey, not only does it look like we hit a top of a 5-wave structure, markets tend to move in 3-wave and 5-wave structures. We got a nice 1, 2, 3, 4, 5 up, and it looks like we're due for some type of a correction. Now, if we're able to hold above 57.23 on BOIL, then that still means we're in healthy retracement territory, and that would end up giving us a cup, right? Or rather the handle. We have the cup right now, and if we pull back and we're able to hold above 57.23, okay, then that's going to give us our handle, and we could see the cup and handle breakout and potentially take us as high as 116.11. Now, we do have a gap up here to fill at 140 on the chart. So it'll be really interesting to see if we see some type of parabolic move and BOIL goes about 100% up to that 140 region. Now, there's no guarantees, and that's not on my radar right yet. I do have it charted up, but more closely, I'm paying attention to this cup and handle, okay? Now, the targets for that cup and handle is going to take us right around 89.15. After we get our correction here, if we do get a correction here on BOIL, and we pull back and hold above 57.23, then I would look for another 5-wave structure to take us up to that 89.15 region, okay? That's going to be the lower end of the range. Now, if it wants to go more bullish, we could go up to 102.63 or potentially even 116.11. What these are is these are your major Fibonacci retracement levels, okay? And so we have our swing high up here, connecting it down here to our swing lows, and we've had this really big move to the downside. And if we retrace, these are going to be all the healthy retracement levels, that are justified after such a strong move down, right? So anywhere from 89 all the way up to 116. And if we're able to flip 116 to support from resistance, that's when we could potentially see a reversal and get a full 100% retracement right up to around that $160 price level. Now, there's tons and tons of work to be done before that happens. That may not even happen. So we need to pay attention to the short term. So remember, below 57.23, all right, that's when we have the chance of, getting 100% retracement to the downside and getting a downside reversal. All right, these are the fib levels of support to potentially continue the uptrend. And then these are the fib levels of resistance after the huge downtrend, right? So really, these are all the key levels that you guys want to pay attention to over the coming weeks and months until we break above or below these levels. We could even really just see consolidation, and we could just move sideways, chopping in between here until we get the next big catalyst on natural gas. Now, remember, I mentioned earlier, some of the strategies that I use. All right. You know, and how I was able to get 42% on a swing trade, on a 1-day swing trade. You know, I do have some shares left over in my Roth, about 22.5% profits. You know, and this is it, right? And this is kind of what I go over in some of the coaching sessions, is a little bit more advanced than what I put on YouTube. But you know, we basically went over Boyle here, had a 1, 2, 3, 4, 5 up, expecting some type of a correction. Cold, on the other end, had a 1, 2, 3, 4, 5 down, and so you're expecting some type of correction to the upside. And sure enough, you know, I got in down here, and then we saw a nice little open up higher on cold, was able to sell right around this area here, and then it dropped back down a little bit, and really just consolidated. But you know, what we had was bullish divergence on cold on the RSI, right? We had bullish divergence here. We had a MACD crossover. The momentum indicator was also got a momentum crossover. I saw that sellers were losing control here on the DMI. Okay. And same thing on Boyle, right? You're basically looking for the exact opposite. All right. In this case, we had bearish divergence on the RSI, bearish MACD sell signal, bearish momentum crossover, and I see that sellers were, or buyers rather, were starting to lose control as well here on the DMI. So you know, that's just kind of some of the stuff I go over. If you guys ever want to do a one-on-one Zoom coaching session, you can email me exactlytrades@gmail.com, and we can go over maybe some different option strategies that are available to you guys. If you guys are looking to hedge yourself with options, you know, we can go over some technical analysis things, you know, whatever it is you guys really want to go over. Just email me, let me know, and we can work on setting up a time. I appreciate you guys watching the video. Smash that like button and subscribe to the channel if you guys are new.